people thinking that rates are one, too high, two, they want to time the market because they may come down or up. What can you say in your professional opinion on, you know, where rates are today compared to the historic? I mean, I want to bring perspective for buyers so that they can continue to make decisions now if it's actually better for them, right?
Historically, you know, since 1971, interest rates on average were around 7.5% on your normal 30-year fixed rate mortgage. Obviously much higher in the 80s, a little bit older. And they, you know, post crash of 2008, the rates kind of went down to 2s, 3s. I remember I quoted someone 1.5% on a 30-year, on a 5-year ARM at one point. This is a very low rate. I didn't realize what I had at the time. And rates were low for a very long time. And now we're seeing, you know, a market correction, which is normal in every market, whether it's mortgages or cars or whatever it is. This is a market correction because rates have been so low for so long. Combine that with the fact that for the past 2 years, people have been, you know, stuck at home, saving money, and they have the ability to spend money. All these different factors are raising rates. But today, we are still below that average of what it's been for the past, you know, since 71. In my personal opinion, if your goal is to purchase a home because you want to be a home buyer, maybe your family's expanded, maybe you're moving into town for multiple reasons, then don't let the uncontrollable, which is the interest rates, control your decision to purchase. The interest rate is going to be what the interest rate is when you buy. What you can control is your willingness to look for opportunities in the marketplace as a home buyer. You can control and work with the Ramirez team to see, does this home make sense for us as a family? Is, you know, have prices come down enough? Am I in an advantage now as a buyer compared to maybe 2 years ago when I was competing with everyone? I now have the opportunity as a buyer to have closing costs paid for from the seller. I mean, these are different factors I would also include. It's not just about interest rate. Interest rate is a huge part of it, and I don't want to make light of it. But there's so many other factors. You know, I haven't even talked about building equity, right? If you purchase a home today, you know, people are fearful of, you know, I want to wait until we're at the bottom of the market before I buy. No one can predict the bottom of the market, right? The market predicts, which is everyone purchasing or not purchasing. So you can't predict that kind of stuff. So, you know, the American housing market has always had ups and downs, but the trend from the history of time has always been up. So if you can purchase today, you can begin to build equity. Even if the value over the next couple of months come down, over time it'll come back and then some. What you can control is, you know, I am comfortable with today's payment with this interest rate, and I'm going to go ahead and buy. And at the end of the day, if rates come back down, you can always refinance and get a lower rate. If rates continue to go up, well, great job. You locked in when they were what they were today. So that's my personal opinion. I know that there are others on the opposite side who feel, no, you should be a little bit more cautious. I've been doing this a very long time, and I'm very confident in how I feel.
Everybody has their, you know, their opinion, and that's their right, for sure. I think it's just so important to, again, filter what you're hearing, and then how does it apply to you, right? Because even some of the stuff that you said, Armando, was extremely valuable, and I align with that, right? Do you want to try to time the market, which I would admit I would fail to time the market, like, you know what I'm saying? It's not timeable. To then focus on, you know, again, we were talking about just being a snapshot in a whole big picture, right? In a movie, right? So it's like, even for COVID days, or then it was, I don't know if you even want to throw in the Austin freeze affecting things. I mean, there is always something. And so I think kind of digging your heels in, getting connected with the right resources, evaluating what today's market would look like for you to see if you can make a good decision, whether that's now or later, that's up to you. But I want to make sure that people have good information to process that.